Howdy, y'all. Welcome back. It's the weekly wrap up for October 1st, 2021. We're already into October. It's years just flying by. So hope everyone had a good week. It's kind of an up and down week for baseball fans like me. The Stros took 2 of 3 from the Rays, which is good, but they got their butts kicked in that middle game. So wasn't all that great. The weather report here in Colorado is starting to get a little chilly. As you notice, I'm wearing long sleeves today. And I think our first freeze is less than 2 weeks away. So very exciting. For those of y'all who have RVs and such, it might be that time of the year to go and winterize it. I'm going to work on that this weekend, get all the pipes drained and make sure nothing explodes over the winter because it gets kind of cold up here. So, all right, well, let's go ahead and let me share my screen. Here we go. All right. Let's take a peek at the stock market this week. The Dow Jones looks like it was down about 1.6%. Let's look at the S&P 500. Looks like it was down 2.01%. NASDAQ down 3.4%. Dow Utilities down 2.28%. And the Dow Transports looks like down 0.79%. So for the week, looks, not that great, but obviously things did turn around here today. A lot of this has to do with, what's going on in the economy, the arguments with in Washington over the spending bills. So there's a lot of flux right now. So what I would probably recommend is don't get too excited or freaked out over any one particular thing. So, all right, let's look at some news this week from Trading Economics, the ISM manufacturing beat forecast. Let's take a look at that chart. So forecast was, where was the forecast? Actual came in at 61.1. It doesn't say. Oh, expectations were 59.6. I knew I had read that earlier. So again, positive news. Wall Street kicks off the fourth quarter with a strong note. I mean, granted, today is just one day, but hopefully we can shake off some of the negative aspects of the third quarter. Consumer spending surprises. Consumer spending was up 0.8 month over month, rebounding from a 0.1 drop in the July forecast. So again, some more good news. Crude oil has been hovering around that $75 number for a little bit now, reached its the high that we had back in 2018. So again, some things are getting a little more expensive while other things are improving. All right, well, let's go ahead and look at some of the data that came out this week. U.S. durable goods orders month over month came in at 1.8%. The forecast was 0.7%, so that's pretty outstanding. Last month also came in above forecast. I mean, even though it was in a negative number, so that's some good news. The consumer confidence came in at 109.3 versus a forecast of 114.5. So again, we see some good news and then we see some negative news. The consumer confidence, and that's basically, kind of a survey of, how people feel about, what's going on within the economy. And, to come in, is that a huge number? It's tough to say if that's, really far below. I mean, you can look at last month, consumer confidence was at 113 and they were forecasting 124. So, something happened from June to July, from July into August. I think a lot of it has been due to the fights over mandates and the fight, like I said earlier, the fights in Washington over spending, starting to make the general public get a little heartburn with what's going on in the world. All right. Initial jobless claims came in at 362,000 versus a forecast of 335. Last week's was 351 and the was not revised up, so that stayed the same. So a slight uptick over the last few weeks. I mean, we'd gotten down in early September down to a number of 310,000 individuals filing for unemployment. So that is ticking up a little bit. We'll see, excuse me, as we head into the holiday season, the malls, even though I know a lot, I don't know when the last time I went shopping at a mall, it's probably been at least a decade. But there are still people who go out shopping. I have been hearing rumors that if you're going to do your Christmas shopping, do it earlier than normal, simply because that there's a lot of supply shortages in the supply chain. So again, we'll see, if the initial jobless claims number continues to rise, that might lead us to believe that there's some weakness in the job market, even though unemployment is low and there's a lot of available jobs. So again, kind of a wait and see approach. The continuing jobless claims came in at 2.802 million versus a forecast of 2.8. So 2,000 over forecast, certainly not too bad. That number continues to fall. The lowest number we had was 2.665 back, was that about 3 weeks ago? So again, it does appear that the continuing jobless claims have creeped up a little bit. We'll keep an eye on the initial jobless claims and see if this trend is going to reverse itself, or if unemployment numbers are going to start rising on the long term. All right, GDP numbers, they came out this week. Quarter over quarter, GDP was up 6.7% versus a forecast of 6.6. Last month's number came in at 6.6. So again, things look pretty good. Again, if you look back here over the last 12 months, 24 months, you can see where GDP, jumped significantly after 3 months of really bad numbers. And then, 3 months before that, you had just some so-so numbers as the economy was, tightening and shutting down for a bit. So again, these numbers look pretty good. We'll see if the positive trends in production continue, or if there's going to be more supply chain problems, which lead to a lag in GDP. The GDP price index was up at 6.2% versus a forecast of 6.1. Again, looking back historically, these numbers have been very, very strong the last 6-7 months, coming out of last year, where again we had some negative numbers in the summertime. So again, there is some good news out there. Unfortunately, if you what's on Fox Business right now, they're talking about looks like the borders. So there are some positive things to look for, but fortunately, it's kind of a mixed bag today. The rig count from Baker Hughes is up to 428. Last week's number was 421 and 411 the week before that. So again, as the rig counts continue to climb, we're going to see easing, hopefully, at the gas pumps, so that our energy prices don't get too out of control long term. All right. I had 2 articles I did want to share that I'll be attaching in the show notes. The first one comes from, it's titled The Biggest Federal Reserve Scandal by Dr. Ron Paul. This comes from the Ron Paul Institute. It was published September 28th. And let's go ahead and dive into this. Following revelations that Federal Reserve officials made trades in financial assets while the Fed was taking extraordinary efforts to stimulate the economy, Federal Reserve Chairman Jerome Powell ordered a review of all Fed's ethics rules. While these trades appear problematic, they pale in comparison to the biggest Fed scandal, the Fed's impoverishment of ordinary Americans, enrichment of the elites, and facilitation of government debt and deficits. The depression induced by coronavirus, though really caused by so-called public health actions government took in response, was the official reason for the Fed's increased asset purchases last year. However, the Fed actually started ramping up its money creating activities in September of 2019, when it began pouring billions a day into the repo markets, which banks use to make short-term loans to each other in order to keep repo market interest rates low. And I know I talked about this with clients like almost 2 years ago when this was going on. There was a lot of chatter on the business channels about the repo market just exploding overnight due to banks moving money back and forth, trying to keep their balance sheets in line. So the Fed started helping them out to avoid some calamity at the time. I remember hearing that this is going to be the end, and of course it wasn't. But unfortunately, with coronavirus and what's happened over the last 12 to 18 months, a lot of those things have been forgotten. So good thing we got Dr. Paul around to remind us of what the Fed really was doing. That they were helping out the markets well before coronavirus was even in our in our headlights. So coronavirus was just a convenient excuse for the Fed to do more of what it was already doing. Now the Fed is using the limited reopening as a scapegoat for rising prices. Of course, anyone who understands Austrian economics understands that rising prices are a symptom, not a cause of inflation. Inflation is the very act of money creation by the Fed. Rising prices that diminish the average American standard of living are not only a result of the Fed's manipulation of the money supply. The manipulation distorts economic signals, producing results including booms, bubbles, and busts. So, all right. Next, inflation has always benefited the well-connected elites who receive the Fed's newly created money before the new money causes widespread price increases. The true motivation behind the Fed's policies was revealed by former Fed official Andrew Hughes in 2013. Hughes, writing for the Wall Street Journal, confirmed quantitative, that's a mouthful, easing kept stock prices high instead of helping Americans struggle with the after effects of the 2008 meltdown. Other beneficiaries of the Fed are big spending politicians. The Federal Reserve's purchase of federal debt instruments keeps the federal government's debt servicing costs manageable. This is why, despite Chairman Powell's recent suggestion that the Fed will soon begin tapering its purchases of treasuries, the Fed is unlikely to significantly reduce its purchase of treasuries or allow interest rates to significantly increase. Powell is also unlikely to upset President Biden and Biden's congressional allies as long as progressives are urging Biden not to reappoint Powell. Progressives want to replace Powell with someone more committed to fighting climate change, because that's important, systemic racism, two boogeymen routinely brought out as excuses for vast expansions in government spending and power. Another major scandal involving the Fed is Congress's refusal to pass the Audit the Fed bill and let the American people know the truth about the Fed's operations. Audit the Fed authorizes a government accountability office. Audit of the Fed's dealings with foreign governments, the central bank, the Fed's discount window operations, reserves of member banks, securities credit, interest of deposits, and open market transactions. Audit the Fed would finally reveal the truth, about the Fed's operations. A limited audit authorized by by the Dodd-Frank Act found that between 2007 and 2010, the Federal Reserve committed over $16 trillion to foreign banks and politically influential private companies. Imagine what a full audit would find. It is time to end the scandal of allowing a secretive central bank to have so much power over the economy and our liberty. It's time to audit the Fed. It's time to audit and end the Fed. So Dr. Paul has been on that crusade for quite a while. So, all right. And the next one is defaulting on the debt. And I apologize if I'm kind of distracted. My dog is barking his head off upstairs because someone pulled in the driveway a little while ago. I think it's a delivery guy. So I apologize. He likes to bark at squirrels or anything that walks by. All right. This next one is defaulting on the debt is the moral thing to do by Ryan McCracken of Mises.org. The U.S. is in the midst of yet another debate over the debt ceiling. In the 21st century, this is a ritual that Washington politicos and journalists go through every few years when the prospect of default and government shutdown is used as a way to hold Americans hostage until they cave to demands for more debt and deficit spending. I won't bore you with the details of which politicians are voting against a higher debt ceiling this time around. Outside of a tiny handful of principled eccentrics of the Ron Paul variety, virtually everyone in Washington favors more deficit spending. The fact that the leadership from one of the parties can currently pretends to oppose higher debt levels tells us nothing about what the regime really wants. What it wants, of course, is sky-high spending forever, and it wants to borrow huge amounts at rock-bottom interest rates to do it. A default would complicate that goal and limit the power of the regime. So we can expect most everyone inside the Beltway to be deeply opposed. So it was not exactly a surprise when Janet Yellen took to the pages of the Wall Street Journal earlier this month to call for an immediate increase to the debt ceiling. She doesn't hold back when it comes to predicting sure and immediate doom if the debt ceiling is not increased. Our current economic recovery would reverse into recession with billions of dollars of growth and millions of jobs lost, Yellen insists. She predicts that failing to raise the debt limit would produce widespread economic catastrophe. In a matter of days, millions of Americans could be strapped for cash. Oh my God. We could see indefinite delays in critical payments. Nearly 50 million seniors could stop receiving Social Security checks for a time. Treats could go unpaid. Cats and dogs living together. Oh my God. That part was me. Millions of families who rely on monthly child tax credits could see delays. Well, when the republic collapses under all this debt, none of these people are going to get paid. So, it's either we tighten our belts now and go on a diet and get this crap together, or it's all going to fall apart. And all these people that you're so worried about are going to be without money anyways. So, all right. And another financial crisis if a financial crisis weren't enough, Yellen claims that the U.S. would emerge a permanently weaker nation, emphasis added, supposedly because the U.S. government would no longer be able to borrow more cheaply than its unnamed and ominous economic competitors. So, yeah, this is a little bit longer. I'm going to go ahead and stop here. I've already been rambling on for 17 minutes. So I'll go ahead and you get the gist. Washington lawmakers want more and more of our money. They don't have to actually work for it. The government doesn't produce or provide a service that makes a profit. So they're just a parasite, unfortunately, on the American people. So, my thought is if we weren't spending $3 to $5 trillion on the federal government, how much more prosperous our country would be. I mean, how much more we could help out our neighbors. We'd have more people who hopefully would be more financially sound and wouldn't have to rely on others. But, no one asks me. So anyways, well, I hope everyone, that's everything I had for today. I hope everyone has a fantastic weekend. Be sure to like, subscribe, and share with friends and family. And if anyone needs anything from me, be sure to give me a call or shoot me an email. And I'll be back on Monday with the weekly economic update. Y'all have a good one. Bye-bye.